23.53% of billionaire investor Bill Ackman's portfolio is in this one stock, Lowe's. So I wanted to take a deeper dive into this one stock and try and understand what billionaire investor Bill Ackman really likes about this stock. What's attracting him to this one investment over, all of the other choices that he might have in the market today. This is the one stock that he's choosing to put the highest share of his portfolio of investments in. So let's get into this. I'm going to look at five different metrics for Lowe's. And starting with revenue growth, I wanted to look at Lowe's revenue growth over the last several years and look at how it's been doing. And what I notice here is this peak during the pandemic. Of course, I think we're all aware that home improvement was an incredibly popular pastime during the pandemic, and revenue surged for home improvement retailers like Lowe's to a level over 24% in a few quarters. Now, that's not something you should expect from Lowe's, and I'm sure that Bill Ackman doesn't expect this kind of growth from Lowe's over the long term, but it was just something that was nice to see that the company surged like this, and that management demonstrated it was able to run the business even with this kind of surge in sales, right? A lot of other companies that experienced this big up and down because of the pandemic, they didn't handle it well at all. They didn't handle it well at all. And I can name a few examples, two of which I'll say Peloton did an absolutely terrible job, right? They overinvested in capacity. They got too excited with the sales growth, thinking that that was going to be long lasting, right? And they just poured in money into the business, preparing for that, and that didn't end up happening. And when sales fell after the pandemic, the business is in all kinds of trouble right now. Another one is Amazon, right? When sales exploded, the company couldn't really handle that explosion, and it had to make a choice to significantly invest in capacity, and they kind of didn't know at what rate to invest in capacity, right? And so they chose to say, hey, let's overinvest rather than underinvest. And now all of those overinvestments are weighing down profitability for the company, right? So just two examples there of companies that experienced a boom in sales and didn't handle it well at all. And Lowe's, it was the opposite of that. And I think that attracted Bill Ackman, thinking, okay, this is a good management team. It knows how to handle challenging situations in the business. That is ultimately going to happen again, right? Businesses go through something unusual uh, quite usually, right? Something unusual happens usually. And so this is something that I'm sure Bill Ackman noticed and said, okay, I like the way this team handled it, and I'm confident in going with them as an investment. The next thing I wanted to look at is Lowe's operating margin over the trailing 12 months. And what impressed me is not just the overall number. 10.74% for a brick and mortar retailer is impressive, no doubt. But what also impressed me is the upward trend. Like in before 2014, its operating profit margin was less than 7.5%, and that's just moved upward. Like, yes, it did experience fluctuations, but if we just look at the trend line, it's moving upward from less than 7.5% to 10.74% in the trailing 12 months. So the company's getting better at what it does. It's learning its business better. It's becoming more effective, more efficient. And that is undoubtedly another reason that attracted Bill Ackman to this stock. It's getting better at what it does. The next metric I wanted to look at is earnings per share over the trailing 12 months. I wanted to look at how Lowe's has been increasing its earnings per share over the years, or if it has been. And again, another impressive metric here from Lowe's. Look at the earnings per share growth. Absolutely explosive. Even if you ignore the time after the pandemic, you could still see a very healthy upward trajectory there. So it's not just exclusively because of the pandemic. Now the pandemic did help, right? It did increase earnings per share explosively, but even before that, the company was doing a nice job increasing its earnings per share from let's say $2 of earnings per share in 2013 all the way up to $10.21 in the trailing 12 months. Another metric I wanted to look at is the cash flow from operations to sales over the trailing 12 months. I wanted to see how good Lowe's was at turning its sales into cash flow from operations. This is a popular metric that I know investment managers pay attention to. So I have a feeling that Bill Ackman could be paying attention to this metric as well. And looking at this metric, also, again, upward movement in the metric from less than 8% before 2014 up to 9.45% in the trailing 12 months, and that's even with an inventory challenge that's built into this valuation. Now, Lowe's, because of supply chain shortages, one of the ways Lowe's dealt with it was to bring on a lot more inventory to make sure that its shelves were stocked because consumer demand was soaring, and the items that it sells are non-perishable in nature, right? Things that Lowe's sells doesn't really go bad. It's not like groceries, or it's not like clothing where it could go out of style and then they would need to discount prices in order to get rid of this inventory, right? It didn't have that kind of inventory risk, so it just decided to front load its inventory purchases, and that is a use of cash flow, and so that's causing cash flow from operations to look worse than it actually is. But still, even considering that headwind, its cash flow from operations has improved over the years. And finally, I wanted to look at the valuation, because investment managers don't just look at the performance of a company, they also look at the price they have to pay, right? It could be the best stock in the world, it could be the best company in the world, but if it's trading so expensively, there's little return available for you to get in that investment, right? You got to look at the valuation. You got to look at the value you're getting for the money that you're paying. And in this metric, look at the PE ratio of Lowe's here at 19.69. It's at the lower end of its valuation over the last 10 years, especially if you look at the time before the pandemic, before 2020. Let's look at 2018 and before. You hardly had an opportunity to buy Lowe's at this valuation. It was barely ever below this valuation, at maybe one or two brief moments. At other times it was more expensive. So you have a company that's showing market improvements in earnings per share, in operating profits, in cash flow from operations, in revenue, all improving, showing management that showed skill in merchandising the business during difficult times, while it's trading at a price that's at the lower end of the valuation over the last 10 years. It makes sense now. It makes sense why Bill Ackman is attracted to this stock and holds it as one of his top holdings. So I hope that provided some insight in why billionaire investor Bill Ackman is holding Lowe's stock as one of his highest holdings. And that's all I've got for this video. Thank you so much for watching. I truly appreciate your viewership, and I hope you see me again next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.